Yeah. So I was like, suppose let's say my accounting profit is somewhere around, let's say it is like 25,000. Let's say 20,000. And here it is 30,000. My profits in my tax returns. So the tax which I pay is at the rate of 30%. So on this I'll be paying how much? Okay, no, this is just like my profits. Okay, so this is what is my tax amount actually. So this is my not my taxable profit. This is my tax expense. This is my tax payable. So as per the tax returns, I am paying a tax of 30,000 and the provision which I made is only 20,000. So I'm paying extra tax. Am I right? So this creates a deferred tax asset. So minus 10,000. So this is nothing but I have paid excess tax of 10,000. So tax payable minus deferred tax asset would give me tax expense. Okay, so I will write it again neatly. So income tax expense is equal to tax payable plus DTL minus DTA. So what is this? Actually, this is not plus, this is change in DTL minus change in DTA. But here the previous DTL is 0 and the previous DTA is 0, let's say. And the current DTL what we got is in our example how much? 3,000. So the change is 0 like minus 3,000. So change is 0 and 3,000. 0 between the change between 0 and 3,000 is 3,000 itself. Okay, so that we are
Okay.
going to add. So my tax payable, suppose my income tax expenses, let's say 20. In my previous example it was what? My income tax expense is 27,000 for example, and the tax payable is suppose say 25,000. So I need to pay 2,000 more. That creates a DTL. Again, if my income tax expense is 25,000 and I paid 27,000. Okay, let's say I'm just changing this 24,000 and I paid 27,000. So 3,000 is my minus 3,000 is my deferred tax asset. That means I paid excess tax for which I can claim like a refund in the future, or for which like I can claim from the government that I paid excess taxes, or in the next year like profits, these taxes would be adjusted. The meaning of asking refund is this can be adjusted, and here the deferred tax liability is created. Fine, and here I need to pay excess. So DTL is very clear. This has got created because of temporary differences. I've explained you what are temporary differences. Now there can be permanent differences also. Just these two differences and we are done. We can go with our examples. So permanent differences, this is financial reports what we prepare, and this is the accounting, this is the tax returns what we prepare. Here I have shown interest received from government securities. See what happens in India, there are certain securities of government, like I can give an example of National Savings Certificate, NSC bonds. These are government's bonds, and whatever interest you get on this, that's the income for you. There's no denial in that. But this is completely exempted from tax. That means you are not going to write in this tax returns. That means exempted incomes won't come under this. So what is going to happen because of this? The tax returns are going to have a less taxable profits. Correct, Smriti? And the accounting profits are going to be higher. Am I right? When accounting profits are higher, that means here the income tax expense is higher and here the taxable profits are less, so tax payable would be less. So that means you are paying less, you are supposed to pay more. So that creates a DTL, correct or wrong? Yes. If accounting profits are more than taxable profits, what happens? Let's see. If my income tax expense is 27,000 and tax what I'm paying is 24,000, that creates what, Smriti? 3,000 DTL. Am I right or wrong? Please tell me.
Yes, sir.
Yeah. So when see, how come I got this? My accounting profits are high. Suppose my accounting profits are somewhere around 1 lakh, for example. For example, it's like 1 lakh, let's say. So on this 1 lakh, I'm going to take, I'm going to pay a tax. Suppose the tax rate is, suppose for example, 30%. Let's say 30%. Okay, I'll give a new example. Suppose my accounting profits are 1 lakh and my taxable profits are 80,000. And I have to pay 30% of tax. So 30,000 is what it's here and 24,000 is what it's here. So did I say that my income tax expense is more? Correct. As I have taken here income tax expenses more and my tax payable is less. So my income tax expense is 30,000. My tax payable is 24,000. So 3,000 is my DTL. Correct or wrong? Yes or no? I have created a provision of 30,000. I have paid this much and this is I'm supposed to pay. Okay. So accounting profit more than taxable profits, DTL is created. That point I have explained you. But here what I mean to say you is temporary differences. I'll explain you how. Are reversible. Permanent differences are not reversible. I'll explain you how that happens. So let us see how they are reversible and how they are not reversible. Okay. Now let's see the slide. So this is the slide. So here you can see GAAP is set of rules for preparing financial statements. Internal Revenue Code is the set of rules for preparing tax returns. And here you get income tax expense, here you get income tax payable. The difference between income tax expense and tax payable is referred as deferred taxes. I've explained you how, like what kind of deferred taxes, deferred tax asset or deferred tax liability in my examples. And usually these two are not same always because of the rules, different rules what are followed to prepare these. Okay. Now, with a small example, we can prove this point. Let's say the revenue is 10 lakhs. The depreciation expense is 2 lakhs. What is what is that we use when we prepare a financial statement, and 3,20,000. This is what we use when we prepare a tax return. Okay. So here accelerated depreciation is used in case of tax returns, preparation of tax returns. And the straight line method is what we use when we prepare the financial reports. Okay. Now,